So this JPY 15 minutes. So my 15 minutes is giving me an overall trend of a bullish, like you can see it here, we have a bullish uptrend. But let's just, although I'm using my 1 hour, right? So this is my 1 hour here. My 1 hour is, let me upload this. You can see this is my 1 hour chart on my trading view. This is my whole setup on my trading view. So I'm waiting to long. So I want to buy to this, I want to buy it from here to this position right here. That's what I want to buy to. But let's go to the 15 minutes and check what's going on there. Alright. So let me cancel this 15 minutes. Now you can see this is my 15 minutes here. You can see that we already have a, let me, okay. You can see that price was, this was our current high before. Now price took that high, causing a change of character at this level here. So we're expecting price to, since price took out this high here, and this is our current high and this is our current low, so we want to set, and definitely once price take out that high, definitely there is a new support level here, and which SMC traders will call it order block. So which means we are waiting for some SMC trader will be waiting to buy from here, so they'll be waiting at this support level, which is the order block, the 15 minute, I call this is my own 15-minute order block. So we'll be waiting for it to mitigate, which it has done that mitigation on the 15 minutes, but I'm not ready to long yet. So what I want to do is that you can see this is the order block. You can see the gap, that's fair value gap. You can see the gap between this candle here and this candle here. This middle candle you are seeing here is the fair value gap, the candle that caused the imbalance of the sell side. So it's the candle that caused the what I it, the buy side is imbalanced and the sell side is inefficient. That's what I call fair value gap. So the buy side are dominating this market currently. So what we are expecting here, we're expecting price to we're expecting price to fill in this gap. Yeah, there are a lot of hidden gap here. There are a lot of hidden gap, but this one is the original that I would expect anyone to do. So we're expecting price does fill that fair value gap. So we're expecting to long, but mind you, you know that this is a overall downtrend. So we don't want to take a trade here saying we are going long. So this one that you're seeing here, this current high you're seeing here, might be an impulsive move from the downside, telling us that okay, price is going up. Like, let me draw something like, so you understand. Let's say we have something like, where's my tools? Let's say we have something like this. Okay, no, this is a downtrend. This is a downtrend now, right? So we are, you know, that price, this I was seeing here, it might, this I was seeing here, it might just be something like a lower high and a low coming down here. So you might be thinking that price is about to reverse. It might not reverse. It might be another higher high or another higher low, telling us that we want to come down. So what I want to do here, let's say this the stage at which price is. So let's say this is the stage. Let me draw something like this. Let's say this is the stages of, let's say this is the current like something like this. Now this is how it is here. So you might be thinking that price is going to buy. Don't yet buy yet. What you want to do is that you want to wait for price to take out that high here, then retrace a little bit down here, telling us that it's a buying trend, just like the 4 hours and the 1 hour. You get, well, the 15 minutes, we want the whole confluence. At least it must have like 2 to 3 confluence. So once it has taken out that high, then we wait for the mitigation. At this point, then we can go long. So what you want to do here, let's say you want to, let me draw something like, you want price to take, let's say this is the last higher low. So we want price to take out this last higher low here. We want price to take out this last higher low, which is this. Once it has taken it, meaning that we have a change of character at this level here. So we can just say we can just call it like, let's call it let's Let me add something. We can call it change of character, or we can call it market structure shift around this list. So we're waiting for our mitigation, which is here. Around this zone will be our order block somewhere around there. So you can just draw a fib. You can draw a Fibonacci that tells us that okay, oh, since price has take out this low and it has this is the current new low, we know that price is about to shift structure to the upside since this side is dominating as the downside. So right now, just like what we have on this side, you know our price is already selling. So we want price to take out this current high here, which is this. So I want price to come down a little bit and take out this high. Once it has taken out that high, then you can now wait for our order block, which is can be this candle here. So let's say this around this side is our order block. So we have our fair value gap around this zone. So you can just draw your fib from the last side to the upside. So you can just put it around this high that took out the previous high. So we know that once price is at about 0.618 or 0.786, then we'll be expecting to do what? To go long. We'll be using like something like a conservative entry signal, like a morning star. Don't use aggressive entry like pimba. They are always risky on the smaller time frame, but if you can use it on the bigger time frame, pimba are always stronger on the bigger time frame. But right now, so right, this is what I want to do here. We want to some retail traders we want to do what? They will want to buy once price touch this zone. They want to take their buy entry from here and to the upside, but I will not want to do that. I want price to come down, take out this current high, tell me that the buy side is over and the sell side is over and the buy side is about to go up. So what I want to do is that this is it here, right here, Abby. So let's shrink this. So I can just add something like, let's say, where's my long position? I can just add long position at about this spot right here. So I'll just drag it to this. I can drag it to this eye here, or I can just put it to this upper level of my parallel channel, and I'll minimize my stop loss to this zone here. You can also shorten it safe. You don't have to rush the entry. You can also shorten it. You can just go down to your 5 minutes or your 1 minute for confirmation. I miss a entry here, so you can see that price took out that high. You can see that price took out something around here. Let me price. This was the current. Let's call this one the current low, right? Let's call this the current high. So price took out that high. You can see that this was the high. This price taking out that high. So we can also look at this one as a mitigation. Price coming down to this area here to go long, but I did not see it as a strong entry signal. That's why I did not take the trade. So what I want to do is that I want price to be like this, take out this our current high on our 5 minutes, then coming down to this zone, I want to see another price taking out that high around there, causing what? A market structure shift or a change of character. It's not the same thing. Market structure shift and change of character are the same thing. So then I will now enter at this my POI level here to go up. So let's say you want to have something like this. Let me add this to the chart. Alright. So you want something like this is your 1 hour, let's say your 15, okay, 5 minutes. This is your, let's call this 15 minutes. Let's say this is our 15 minutes order block. So we have another one again here. Let's say this is the level at which I'm ready to enter the market. I will not enter the market at the other block. The other block is just like a supportive zone, but I want to enter at my POI zone. So I want price to mitigate that my POI zone. Then I can go long with a conservative entry signal like this. I want to see a conservative entry signal like something like this. This three candle here. You see that red one is like an accumulation candle. This little one that look like a cross is like I will call it the manipulation, and the blue bigger one that is bigger than the two of them is like how would I call it, a distribution candlestick. So it's a confirmation. That blue one is a confirmation telling me that I should go long. You can see that this current blue candle that is here is currently going up, but I don't want to enter at that level. I want to follow my A plus setup, which is this candle here, which is this formation that I have here. I want to see something like this in the market. I want to see something like this. I want price to take out this high. I want to see price take out this current high, which we have here, which is this one. So I want price to take out this current high, so causing a market structure shift, then mitigating into my zone, which is this, mitigating to this zone, then I can go long. So that's how it is.